Alright guys, so yeah, unfortunately I'm not better. I've been sort of watching the markets from afar in the last 24 hours. They have been very interesting though, you know. The all-important RBNZ came out. A little less dovish than some of the market had hoped for. But then you saw aggressive selling after that. Now, what caused that? You know, what caused that market to come through and sell again? It's because they started hinting towards intervention. And so they really ramped up their rhetoric here. And the markets run with that after initially sort of pushing back on the Aussie Kiwi all the way down towards 107 and bounced off that. Now this is actually really nice price action. This is supportive of a move higher still. So we want to be using dips here to buy because it's still got that backdrop is if the Kiwi and the Aussie rally, then Aussie's probably going to outpace it, and if the Kiwi and the Aussie fall, you know, there's going to be more buyers for the Aussie on the dips. Alright, so the outcome here, the outline for the why we keep buying Aussie Kiwi, not just because of the fundamental, you know, exchange, like the differences between where this rate could be given the interest rates, you know, towards that 110 to 113 level, but also the timing is right, and sometimes that's all that's required for this market. Now the Kiwi, when it starts to sell, usually has a good sell-off, so I don't think it's going to stop just in the middle of nowhere. I think we'll get down to 71, 80, 71. Yeah, I'm not going to be chasing because I'm not feeling that well. I'm not going to be watching, and the US dollar is a little bit off the. I mean, they're in the middle of a US dollar correction, right? And so you're seeing that coming through with the euro leading the pound underneath 130, and Aussies holding up okay, but testing the previous resistance, which is all the way back towards that 2016 high. So, you know, the market is in interesting times, but broadly what you want to be doing is you want to be testing the US dollar recovery. So you do want to be using this opportunity to buy the euro on dips. You do want to be using this to buy the Aussie, I suppose, on dips, and then selling some dollar CAD on dips as well if we get a little bit higher. So you let the market come to you. You don't have to be sort of be the first one out there to buy. The levels which are interesting are down towards that 116 level, so not much further, another 80 pips, and then we can go looking for the market to stabilize and maybe go range trading. I think the first time down anyway should hold. Alright, so the first time down should hold, but we'll keep an eye on it. In terms of the dollar yen, look, the story regarding North Korea, that sort of subsided. It's only got a life of around 24 hours, and so unless more things come out, then that could be something which goes to the sideline. Then you might get a late recovery if stocks go up. You might get a late sort of resurgence with the dollar yen playing catch up to where it should be if it had been alive, not underneath safe haven pressures, if that story hadn't broken. And so if you see stock markets go well, then this sort of dollar index level should put the dollar yen at around about 111.50. So it's under pressure, and it's, you know, at this 110 level mainly because of the risk of, if that subsides, then it's got some catch up, you know, a little native rally. But so far the stocks are really taking advantage of this as a potential catalyst for correction, and it's starting to get a little bit serious. Definitely in the DAX it's getting serious. It's only 250 points so far in the Dow, but it's still, you know, got such a big amount of room to fall that could really undermine any sort of dollar yen nascent recovery. So if this stabilizes and you start to see a little, you know, resumption of the buying, which was just relentless last week and the week before, then dollar yen will play catch up. Otherwise we might be pressing lower, but with the US dollar strength, I don't think it's going to collapse. Right, but what you are seeing is euro yen and pound yen under a lot of pressure in this environment. Okay, so now they're quite interesting as well, because we don't mind buying those on the pullbacks. They've got a lot of you know, especially euro yen. If you believe the euro recovery story, then one of the best ways to express that is against the yen. You just got to get past this risk off sentiment. So, you know, that'll be a trade we're doing in coming weeks for sure, if it gets a bit more serious down here. But yeah, it's more of a watch and wait type of day today. No reason to go in hard on trying to pick a bottom. Let the market base out a level for you and then hop in and go with it. The other trade which was interesting is that Euro Swiss. Remember that Euro Swiss had that 500-point rally, then that snapback. So there should be some interest to buy this. Very similar to Euro Yen. I might have to keep an eye on this Euro Swiss. Makes sense, that trade. And that's the main thing there I'll be looking at. Euro Aussie. Yeah, it's still holding that trend line. I haven't got any exposure, mainly because I'm sick and I haven't been paying attention too much. But yeah, I don't mind buying here. You know, what I'm worried about with this euro is I'm worried about the ECB seizing this, because ECB is pretty tricky. And what they do is that when the market's under pressure, they'll come out with something like ECB sources suggest tapering program is smaller than initially expected, or ECB tapering may not be ready for September. Something along these lines, get the market selling through a technical level. If they do that, they've done that before a few times, then it can put a bit more damage on the technicals. So keep that in the back of your mind, that they do that often. A little bit of a shove through levels. You saw that back when we're underneath 110. That sell off there was on the back of not that one, this one. Yes, this one was on the back of ECB talking down. It's a very nice uptrend. We shouldn't be scared to go buying this on dips. Let's have a look at some of the research that's come out overnight. So, Bank of New Zealand. This is not RBNZ, this is just a bank over there. Cash rate remains at 1.75%. No sign of a rate move anytime soon. Inflation forecast slash, but assumed temporary. Future clouded by personnel changes. What? No, markets did not yawn after this. This must have come out after the before what there was the RBNZ, and then there was a second speech by the RBNZ governor, where he really started dropping the intervention words. But this is interesting. So the governor is up for grabs, huh? So the governor, this is the last Governor Wheeler meeting. Interesting. Interesting. Well, these guys are no sustained risk in increase in risk aversion. Let's have a look at the VIX, see what's done. %5. Just loading up a VIX chart, guys, just seeing how it's reacted to yesterday's seller. Fortunately, it's taking a little bit of time to load. Come on, computer. People are waiting. Another reason to be concerned about the Kiwi in the risk-off environment, they usually hit Kiwi the hardest. Because it has the highest yield advantage. Here we go. Yeah, guys, I can't give you solid. I can't give you solid updates. It's, I think the sort of the cautious view though to looking to buy the euro and the pound might be the best way forward here, and just keeping an eye on that ECB breaking down. Hopefully I'm much better tomorrow and we can go in a little bit more depth on each of these pairs, but I'm struggling to read these reports because they're so fun. No, it's just it's hard for the brain to care. But yeah, we'll see how we're feeling tomorrow, and we should be back up for another update. And it's a very interesting trading time though, you know. This is the first sort of counter trend move we've had in many weeks, and it's provided, you know, multiple, at least interesting now, right? This two-way action. Alright guys, we'll be back tomorrow. Best of luck, trade safe, yeah.